Sarah Hunt joins us now to talk more about the markets, the Fed, and what Chairman Powell might say when he speaks tomorrow at Jackson Hole. She is portfolio manager at Alpine Woods Capital Investors. Sarah, good to see you again. Welcome back.
Thank you.
What do you think Wall Street wants to hear Jay Powell say tomorrow?
Well, I think that the bond market is trying to telegraph that they expect Chair Powell to cut rates again. I think that's why you're seeing such low rates across the curve. I think the difficult thing is that you just had 3 weeks ago a press conference that he gave where he was trying very quietly to thread the needle and say, look, I think we needed to have one cut. I don't think that we need to have more unless we see data that's very difficult. So I think right now he's in a little bit of a tough spot.
He's also in the spotlight, certainly with the administration and specifically the president. So he has to walk that fine line and not be seen as caving into an administration, but also, if he needs to cut rates for the economy, do that. So might he talk about other instruments that the Fed has in the toolbox?
I think there could be some discussion of other possibilities that the Fed could use. I think globally you have low rates across the world, and I think that's part of the problem for the U.S. is that U.S. rates are being driven down because you have negative yielding assets across most of Europe right now. And I also think that they're going to try to talk a little bit about what the other possibilities are in terms of what other kind of policies, such as fiscal policies like a stimulus or something else, that governments can do besides the central banks, and try to get the discussion away from central bank policy as the only tool that governments have across the globe.
It's not just the bond market that's anticipating cuts. I mean, we've been seeing some of the interest-sensitive sectors of the stock market do well as well. Does that last for a while? Do they become more attractive to you necessarily? Do you become more defensive in your portfolio?
Well, I think when you look at global rates, global interest rates being low so much across the world, I think you have to look at things like utilities and REITs and the places where you get some sort of a yield, because investors are looking for yield. And in many places, the government bond market, which is where you used to be able to find it, you can't find it. So I think that there's an element of defensiveness just in going after dividend stocks to begin with, but also some of those areas where if you think rates are going to be lower for longer, they stay attractive, which is why you've got valuations that are much higher than you would normally see.
We will see what happens tomorrow. Sarah Hunt with Alpine Woods Capital Investors. Again, thanks for joining us tonight.
Thank you.